Hey, welcome everybody. Let's do this. So we're going to end today. Just a little heads up. We're going to end today about 5 minutes early because I'm doing this next presentation at 1 o'clock. So I got to get in there as soon as we're done. But today we're going to be talking about breakouts, breakdowns without emotion. I don't know about all that. Thing is, we're human. We have emotions. Trading comes with a certain level of uncertainty, but with every MT Live, we create part of your trading plan. And with a trading plan, it gives you guidance as to how to trade on any given day, whether you're a swing trader, whether you're a day trader, whether you're an investor. It's a matter of changing time frames. Patterns don't change, our concepts don't change, and that's what gives us and should give you the confidence to trade accordingly, as long as you have money management along with that trading plan. So with no further ado, let's continue, get through this, and then I hope you'll join me in the other presentation when we're done.
So let's get to it. This is our starting point. We're pattern-based traders. No setup, no action. Whatever instrument you're trading, whatever time frame, and we show you these pictures of what compelling time frames are. And then we take that picture. Where is it in the overall trend, support and resistance, multiple time frame analysis? What are the broader markets doing? And these are all concepts that make up our approach that our Greg teaches in his course. And when you have Greg's course, you have all the objective information to analyze every single chart. And then from that point forward, it's really just, I call it in one word, it's seasoning, it's experience. So all these concepts on any chart, as we're flipping through, Greg and I, as quick as our eye can look at it, right? I say 1/8 of a second. We're digesting all of this information to know whether it's a high probability setup or not. And so these are all examples of bullish pictures on whatever time frame. And you might be asking, well, where's my breakout? That's what we're covering today. True. It's specifically not on here. We have many other patterns, but this is our starting point. Every one of these is a bullish starting point. On what time frame? Where's the trend? Where's support and resistance? Well, I was going to say that's the but correct. I was you're leading into me. So those are the best two breakouts on these 9 slides. But yeah,
and the reason being, and this is not really a breakout, but that would get into the conversation of multiple time frames and so on to put it together what's happening inside of these bars, assuming these are dailies. But the essence of why I circle these is because the pattern has tightened up, small ranges. You don't have what's to the left there, but take my word for it. That's why I pointed these, that you had this consolidation, and any breakout is preceded by a consolidation that can take many different forms. So this one bar kind of is a consolidation because it's consolidating the gain that happened on this big bar. And so this is one of our favorite continuation patterns that occurs. Maybe it happened after a breakout. And so that's why we call it a continuation pattern, where these here are more evident as to being breakout type of patterns. And so this one would not have broken out yet, but the way this is presented, where you got the red bar followed by the large, right? Key point, large, wide range bar, would tell you that it's a high probability setup to go long.
this is what we're covering today. And Both the examples that we're giving, you could have a breakout or breakdown in any trend. What are the only three possible trends? It's up, down, or sideways. So what we're going to cover with you today is breakouts and breakdowns from consolidation, but they're going to be in different trends. Now we've had separate MT lives on trading breakouts from bottoming patterns as a specific type of breakout. But today we're going to actually be focusing just more so on breakouts and uptrends. But when we switch over to the real charts, there's a number of bottoming patterns that we do have our eye on right now. So a couple basics here. A breakout is a breakout through resistance. We never buy a breakout from the bottom of the consolidation to the top. We want to see bullish consolidation where supply and demand is getting tight. So once demand overcomes it above resistance, and you look to the left and there's insignificant resistance, which we call a price void, that's the initial breakout. Today, we use this word tells, and that's why I got these poker guys down here. I'm not a poker player, but Greg came up with this term, which is kind of poker related. It's like I'm watching, I'm collecting data, gotcha. And so we're going to have these tells when we say, I'm now confident to enter this breakout. Doesn't mean you won't get stuffed out, but it means it's a high probability setup because some people are just afraid. I don't buy breakouts because I read on the internet that 80% of them fail. Well, number one, where the hell you get that statistic? Number two, what breakouts are you trading? Number three, if you listen to this 1 hour MT live today, I guarantee I'm going to eliminate 80% of your bad setups. So let's continue. We got limited time. So that's the initial breakout. We're going to show you many examples of quality initial breakouts. And then a pullback and retracement on this minor support, which is the breakout resistance, is a very high probability setup also. Same with the breakdown, it's the opposite. So this would be a sell setup after breakdown, and this would be your initial breakdown. We have all these MT lives. We have thousands of examples, so we just go through them. And Greg has this saying, it's the same but different, just like a poker player. Whatever hand is dealt me, whatever the bars look like in that particular example, I know how to trade it. This is a daily chart. Our charts are this simple. Color-coded candlesticks, color-coded volume, and we use 3 moving averages to help speed up the analysis. 20 is short, green intermediate, red longer term. So I can take the candlesticks off and I can tell you what's going on different time frames just by looking at the moving averages. So if we overlay them to speed up the analysis, but we never trade moving averages. So here we go. I got a flat 20 and 50. I have an igniting gap breakout with an explosion. We call this a big, fat, wide range expansion bar. That's power. That's a decisive breakout. No questions asked. But we're talking about today how to trade breakouts, right? So this gapped over all this bullish consolidation. It gapped over all of this resistance. So we would have had this in our morning green room watch as an igniting gap trade. We put it in a 5-minute thumbnail, and based on this very small bottoming tail, we probably bought a 5-minute high as a swing trade igniting gap breakout. But let's focus on this part, and then I'll let Greg continue. If you missed it, it's too extended for me. I mean, yeah, this was a bull 1, 2, 3 continuation, But look, this thing ran from 580 to 660. It's just ran too much for my comfort zone. So let's monitor it. It's consolidating for 2 weeks in the upper part of this bar. We're talking about tells today, right? In addition to, tells of when I'm confident to enter the breakout. This bottoming tail right here, still at the top of the range, you could have started nibbling over that. Uh-oh, as a topping tail. Small gap down. When we say range expansion, it is what it is. The range of the bar is expanding. So the fact that it had a topping tail in a range expansion closing breakout, no tails, that's full closing breakout, that was our tell to buy. And this was a closed trade. I'm not giving you all the detail on all of these. They're in the members area, but we gave it to subscribers, booked 24 points, whatever share size you have on 100, on 50 shares, it'd be, $1,200.
Well, let me cut to the chase on this, because that long explanation that Dan gave was great. A lot of details there. If you want, and we should narrow things down to the point where something gets our attention. And I dropped that link in there, and I mentioned it in the green room and pre-market today about this blog post that I made, tight versus loose. And so what I drew here, right? This, right? These moves up and down between these pivots, as we call them. And then it got tight. I put a little narrow box there. When things go from loose or wide to tight, the forces of supply and demand are coming together. That's one concept. Now you look at the moving averages, they're coming together. It's a visual aid. It's going sideways. At that point, it's like, I think something's going to happen because it got tight. Now I need to see something happen. It broke out. That's what happened. Wide range bar. And so at that point, you could have went long on the 1, 2, 3. You got to share size it appropriately. You got to know what you're doing with money management, the most important thing. But look, it got tight. Pivot, overlapping bars that got tight. You are getting ready. And that was the point where it triggered long. But it started here to recognize what was happening before you got here to get ready. And sometimes, a lot of times, it requires the patience and observation of the same particular stock or any tradable instrument to get ready to the point where you can act on it. Now, if you're willing to give something larger wiggle room, right, which nothing wrong with that, but money management is the key to giving something that extra wiggle room when you believe that that instrument is going to move in a certain direction, and then you can add to it when things tighten up. Let's continue.
As you said, let's jump right to the chase here. I got an uptrend, 20 flattened out, so I have a short-term consolidation and an uptrend. Where's my tell? And there you go. There's the second box is what I'm referring to.
Sure.
The bottoming tail flipped down, took out 3, 4 bars prior lows. That's not an action point. It doesn't become the actionable tell until we trade above it. And so now I have a closing breakout. That's my tell. That's when we bought it, because of this 2-bar downside continuation and an uptrend.
So let me explain. One of the things Dan said a few moments ago was we do not buy when prices go from the bottom of the range to the top of the range. Now, money management allows you to do many, many things, whereas this is a move from the bottom of the range to the top of the range. And let's just assume for the discussion that it took out this high. Many would call that a breakout, and it is a breakout. It was an area of resistance, went from here, went up to there, it broke out. Now, if you enter it there and you say, I'm going to have to share size it down here, which would mean probably a really small position, which is okay, because you're now going to have to let things move around and you're waiting for this to occur, things to get tight. Look at the size of those candle ranges over here. Look at how they get so small. And look at the bottoming tail bar, the small candle body. This is the tell, and that's why this was the breakout. So once this bottoming tail bar formed, that was a tell. It came right back up, and look at the size of the ranges are so tight. That tells you something's going to happen. Sometimes we use the analogy, the spring is getting wound real tight. That's a picture of the spring getting wound. And now, besides that, the trend is up. Now, what's to the left? Maybe there's no resistance to the left here.
Mhm.
So we're putting all of the pieces or concepts together to increase the probability of a trade. Now, you have to understand all of that, put it all together. Once you do, then you got to find the setups and wait for them to trigger.
Momentum move down. It's now, what, 2 months of consolidation. Igniting the biggest green bar on this whole chart. Inside bar. That would have been an acceptable 1, 2, 3. But it got even better. We got 2 more consolidation days. And when we teach the 1, 2, 3, I like to just put this fact in your head that 1 day of data on a daily chart is 26 15-minute bars. So the fact that we got 2 more bars is 52 more bullish 15-minute bars to provide a launching pad for the 1, 2, 3 breakout.
Yeah. So I drew this little triangle there. Wasn't to show you I can draw a trend line, but some would show you a picture like this. And what it is displaying, if you were to see something like that, is again, is the contraction in volatility. Things are getting tighter. It's likely to continue in a certain direction. Now, the question would be, well, what direction? Well, that breakout suggests it's going to continue to go up. This consolidation built a whole area of price support, and then it broke out. It should be able to move up. So that's what we're creating a belief system. And that's what a trading plan is. How do you create your belief system for placing trades? That's what we're showing you here. When we boil it down to this simplicity, right? We break down or break out, right? Building breakout and breakdowns is what's the trend? Does it have room to go up or down? Has the pattern gone from loose to tight? What does that look like? And it can look very different in different instruments, right? Or different market environments. So what we're looking at here is different pictures of that same thing. Trend, loose, tight, trigger.
Greg, do you want to answer John?
How many consolidation days is too many? It's hard to say. I understand trying to pin things down to an exact science, but trading is hard to do that. So different market environments. Look at what we're doing right now with this Fed thing. It's been like going on almost 2 weeks. I think that's too much because it's, disgusting, but it's out of our control. At some point, we're going to get an event. There's going to be an event bar, which there should be today, right? We're waiting for the news. After this guy gets done talking, by 3 o'clock or so, there should be some kind of an event between 2 and 3. So I can't give you a clearly black and white definition of how many days. But if you get an event and it doesn't follow through, in a certain amount of time, you begin to question the validity of the event. Questioning doesn't mean do something. It just means, be intelligent and say, you know what, maybe what was happening before, things are changing. It doesn't mean your analysis was wrong before. It could be. I don't know. I'm just saying, on a very broad sense, it doesn't mean the analysis was wrong, but what it means is something is changing. New environment, not new environment, new news. Remember Liberation Day, tariffs? Oh, we're backing off on tariffs. That's insanity, but you get what I mean. Things change. Human nature doesn't like change. That's why trading is difficult. It is what it is.
All right, so remember I said breakouts and all different trends. Here's a breakdown in a sideways trend within a trading range. We're swing traders. Swing trading to us is, just 2 to 10 days kind of. So here, time limitation, but I don't know if you want to say anything, Greg, but this would be a horrible quality breakout. This is an example of what not to do. It's tight, it's slinging all over the place, and there's no price void. But let's continue.
I would add to that is that it broke out without really tightening that much. Now, you can see it's, this range here, but it was only like one day. That doesn't mean it would not have worked. It could have worked. All we're doing is we're giving an assessment of, hey, this is like a 10 and this one is a 6. But you know what? I've seen plenty of 6s work. And the thing to do, if you think it's a 6, is to just limit the share size. It doesn't mean you can't do it, because ultimately it's whether it hits the stop or not. And many times these type of situations, this kind of thing where it fails, could be related to the broader market environment. It could be that this stock, whatever it was showing relative weakness, meaning it broke out after the market had just run 6 days in a row up into resistance and stalled. So that first slide where we showed you all the concepts, we're not talking about all of them today. That's what a course does. And so I'm adding some flesh to the discussion here as to, look, this pattern wasn't terrible. It wasn't a 10, but maybe it was showing relative weakness at the time. That's just a thought to, that's something that you would have done analysis of in the moment. It could have been a sector. It could have been, hey, that's I don't know what that stock is. Doesn't really matter. But let's just say it was a semiconductor and the semiconductor index just ran up and now all of a sudden this thing's breaking out.
Okay, so but the fact that it went up and then got slammed with a range expansion, closing breakdown, inside bar, that's my bear 1, 2, 3. Momentum move is a price void. My target is the prior low. This is a closed trade, everything in the members area. We give the date, the symbol, the stock or option trade, the technical setup. So as Greg said last meeting, you earn while you learn. We're teaching you every trade we give. 1, 2, 3 breakdown. It's actually the 20 MA. Target 136.50 right here on support. For plunk in the target, and it's just this 3-day swing trade. This was an option trade. Look at my moving averages. I got a flat 200. I got declining 20 and 50. Where's my tell on this one? I should have put an arrow here. It gapped up. It got slammed back down. I have 2 inside bars with topping tails. We've been doing these MT lives for 10 years. So what do those topping tails mean? They were attempts to go higher and then selling supply drove it back down. Under major support, nothing to the left. You either short the stock, and in this case, we love buying puts when they're liquid, of course. The benefits of leverage and limited risk. You bought 10 contracts, you know, you can day trade. There's nothing, we love day trading, buying calls and puts when they are liquid. No, here's, that was delayed. But look at all these upside shakeouts. They were attempts that got slammed. We'll talk about this more at the end also, but this is a snippet of all of our year-end holiday specials. We only do this at holiday time. We have ultimate bundles, option
So
course.
let me explain, Dan.
Sure,
just
please.
going through quick
Sure.
as to what is the bundle. Well, the way this is set up, when you go to the page, you just may be interested in, say, the gap trading course or the money management course. Well, you would go over here and you would pick swing trading course or money management course or gap trading course. This link will show you the three of them there, and the cost, I think it's 50% less. If you're interested in options and you say, well, I just interested in the volatility course because I've already got the credit spread course and the directional course, or maybe you want the credit spread course. Well, you go here and they're individuals. Whereas the bundles, you'd say, hey, I can get all three of those courses. I don't have any of them. I can get all three of them for a great price, or you want all the MTS courses, all three of them for a great price. If you're interested in the green room or the advisory letter, you would go here and you could sign up for the green room annual or the advisory annual. I think this is like $1.60 a day. Most people sign up at this time of year for that price. It's the best. Or the advisory at this time of year annual, and the best prices. So that's the whole takeaway from those different sections there. So in this page, and you can get to the whole thing, that whole page there by mastertrader.com/holidays. And so here you have the directional course, the credit spread course, the volatility course. And I think this is what you captured here was the bundle, because you get all three.
Correct.
That would be the price. And you can see the individual price there. It's substantially less. And go too fast there. Yeah, but it comes with coaching and which I think I'm going to do one next week. I know we're getting the holidays there, but you did one last month. But again, you can go to the individuals. So go ahead.
And
so there's the prices. I was off 40% off. It's a no-brainer. These are hours of education that you can watch over and over and over again. It's the repetition that makes it sink in, and then your ability to look at the charts. And if you're in the green room, to ask questions every day and see the trades and how they play out. It's the same as other types of education. You get education, you gain experience, and you gain confidence in doing that. And so this is the best time of year. And, you pick your course that you want, or pick the bundle and get all three. And, go look at it. Check it out.
Nothing to say. Total no-brainer.
Yeah. And so why? Look, I don't want anybody to get bored with this, but when you know what you're looking for, it tends to get bored, and your biggest hurdle is that you want to press that button. But we're looking at the same thing. Look, or I could draw it like this, where they call this a descending triangle.
Yep. Mm-hmm.
It's contracting. It's going from loose to tight. The trend is down. Look to the left. Is there any support there? In addition, you could have then apply the broader markets, is this showing relative weakness? into market analysis, what's happening with the particular sector. So the techno fundamental part of MTS looks at the technical analysis, the intermarket analysis, and the market internals. And so as we look at whatever we're going to trade, those are other parts of our analysis that we're going to look at. But as you know, we're just focused here today on these breakouts and breakdowns. The takeaway is, this had a strong move. It had a counter trend move. It held support. It made a lower high. It made another lower high. And the supply is beginning to increase lower highs. And so to anticipate a breakdown makes sense. In addition, you have, I didn't want that one.
Yeah, no, those two bars were saying get friggin' ready to hit the button.
Right. It attempts to go up and it gets knocked back down. It gaps up. It gaps up and it gets knocked back down. And that's the concept of bar by bar analysis.
So this is gold ETF. This was a prior one that we took our money, but we re-entered gold in our ETF letter, which only trades ETFs for longer holding periods. So this one we held 39 days. Look at these flat MAs. So this was back in March. That is a no-brainer igniting breakout. From these flat 3 MAs, I had market here, but look, this is a downside shakeout. And now you're back going sideways. So as soon as that gapped up, we sent a telegram alert to our ETF to buy it, stop under this base. We sat through this consolidation, wide range expansion bar on volume. We took our money. So, 19, we share size it for $300 loss. So we made 3x our money in 39 days.
I just reinforcing the same thing we've talked about here now since the beginning. Loose, tight trend. What's the trend? Has it gone from loose to tight? Does it have room to go up? Does it have room to go down? Bar by bar analysis tells you when to trade.
Yeah, on this Climo, I see the history here. We did sell a third up here. And, we should have gone back to full size over here, but that's Greg's AMS course. Here's a different flavor of breakout. From, you could just call it a bottoming pattern, but it's also an inverse head and shoulder bottoming pattern. So it got clobbered on earnings, sold off. A head is a downside shakeout. So it made a new low, 100% retracement, bullish price action at resistance. This one bar here was a closing new high. When we say closing new high, it's the real body. So we don't care about those tails. That's a closing breakout new high. So we bought over the high of that bar.
I like to draw, Dan.
Sure.
So you see what I'm doing here, folks? I'm introducing the idea of multiple time frames and how we teach that and visualizing. I didn't draw it exactly, but this is a move down and this is a big move up. So if we were to compress that, it would be a bullish 180, and this would be a consolidation after the wide range bar up. So as this is being expanded as it is, right, you see a head and shoulders bottom, and over here, things got tight. And it sprung down and back up again. So it's, I like this word reasonable, because none of us know 100% for sure, but this is what we're all after. This is the trap. It's a trap that we all fall into. At some point, you have to get to a point where you accept not knowing. The money management is the key to being comfortable with that, right? Because we're not saying, hey, walk across the street with a blindfold in traffic. We're saying there is a way of not knowing the future and being able to control your risk. So recognizing these patterns and putting the concepts together and then bar by bar analysis puts the odds in our favor. And if we ever knew absolutely 100%, we wouldn't need stops. But we always have a stop. Always. Because we don't know. But we have management ways, once things started to move, when to start trail stopping. Go to the next, Dan.
No brainer. Just multi-month, multi-week consolidation, rising 50. Here's a 1, 2, 3, 4 at the top of the range. Small close. I mean, that was the trigger of the 1, 2, 3. So we'd be in it on that bar. And then we're just in management mode. 4 days.
What, Dan? You know how we love to talk about the indicator-based mythology and the indicator salesman, but look, if I was to put some kind of Bollinger Band system or some kind of proprietary indicators that would tell you that it went from loose to tight, and we could add that to the bundle, where you get the special indicator that goes from loose to tight, it'd be like, wow, wow, wow. But I'm just showing you a way to just look at it and say, you know what? High, low, lower, low, back up again, tight, it should break out. You're gaining knowledge with your eyes that you can apply to anything, right? Apple computer, gold, Bitcoin, currencies, doesn't matter. It's all the same thing.
Uptrend, downside shakeout, consolidation, small little bullish engulfing. We buy over the high of that target prior high. Same but different.
Or boy, it should take the high out. That would be my assumption.
Yeah, so you could sell half and then let it. Yeah, of course.
Yeah,
sure.
I mean, and the whole idea of whole numbers. Usually prices will stop at those whole numbers for whatever reason. Because people look at it, just look at it at that. Can it get through that whole number? But look, folks, looks the same thing. And you know what? This setup right here, that was doable.
Agreed. Right.
That was doable.
Sure.
Sideways, it tightened up right into a rising 20. Why did this happen? I don't know. Bad market day. Some news came out, but it came right back up again. And you learn how to shake this off, meaning we would have gotten stopped out, because I can't tell you a reason not to have done this just based on what's on this chart. But I sure as hell would have gotten back in again, because the retracement, it came right back again. Look at that bottoming tail bar, and it tightens up there. Good setup.
Yeah. So, all these copy paste here are either open trades or closed trades. If you see the final dollar in there, and, Greg mentioned it earlier, but this is the advisory letter. And so you can buy that on this. It's the cheapest for all year long for an annual. And you did the math earlier. It's a no-brainer. The green room is our live trading room. Start at 9 a.m. with market prep, going over opens or gap. We'd love gap trading the open, answering questions all day, scanning. It's just a no-brainer place. Even if you can only spend an hour a day at the morning or the afternoon, it's an incredible place to learn in real time.
So folks, so you understand what this is. When you click the checkout, you type in the greenie or market edge. Now, what this lower price is for those that are students, memberships, whatever. This is like, you don't know Master Trader from anybody. You come here, you're not a subscriber. What I'm going to tell you right now for holiday time, forget about this. If you're new to Master Trader and you're not a subscriber to a letter, you haven't taken a course, hopefully after today you will use this one for the green room. At $1.60 a day, it's a no-brainer. And the advisory swing and option trader, text alerts, coaching, so on and so forth. Great, great value at this time of year.
All right, one or two more, then we'll switch over and look at charts for a minute or two. I got flat 20, it's bobbling around. Here's my tail. It tried to reverse on support. I got two more sideways bars. I got a range expansion, closing breakdown. I got a price void. You just hit the button. So no, it's a breakdown.
Well, that's the bar, that's the tell bar right there.
Yeah.
Look at the ranges, how tight it got. It was tight here, it was tight there. It went up and it came right back down again. It came up into this resistance area. And look, at this point up here, it's like, hey, if this could go sideways and get tight, we'd be looking for that to go up. But that didn't happen. It went right back down again, but then it tightened up. And this was the tell bar right there that said, go ahead and short it. And it's, theoretically, it should come down here.
Mm-hmm. Look at all these breakdowns on here. So this would have been an actionable 1, 2, 3, and then it just gave it all up. So there's a closing breakdown, but there's no price void. Now it's going. John asked this question earlier, right, John? How many bars? And I agree. It doesn't matter. But the fact that it's going sideways for a month and cannot bounce, that's adding more supply. But I'm still waiting for my setup. So here's a small little 180. You could have shorted there. Still can't go anywhere. Here's a closing breakdown. That's a no-brainer. Bobbling around. There's another tell. Took out the high of whatever, 8 bars in a downtrend. So that would not have been a breakout to buy. But instead, as a continuation short, I got an inside bar. There's a 1, 2, 3. That's actually the one we gave subscribers. And just went into simple trail mode. Held it 10 days. I mean, that's an example of easy management where it doesn't gap overlapping bars. Remember on our first slide when we had 9 pictures of bullish, and Greg, remember you circled the one about a pro gap breakout?
Yeah.
This was that exhibit. Ugly red bar. Now, so let me back up. Based on this little inside bar here, that would have been a quality breakout. But news hit. I don't know if it's earnings or what, but I don't care. But now the belief is that's going to go lower. Closed under all this with a range expansion bar. It gapped just over all this resistance. Notice that there's no tail, so it didn't even retrace, even though it was a big gap. We would have bought a 5-minute high. So this is a pro gap breakout. One more example, and then we'll move on. I just purposely grabbed an example of another name that we call late day breakout. We have a specific definition and setup. It's something up on the day in the morning, first hour, its strength, consolidates all the way until after 2:30, 3 o'clock, preferably. Bullish price action that stays in the upper third of the morning strength by the afternoon breakout. Now here are the bars. And so that's not just a vanilla thing. You got to apply the bars and price void in multiple time frames. But this red bar suggested lower prices. Nope, not so fast. Buyer stepped up. Here's my closing breakout. No brainer. Here's my daily chart. Broke out. And that's it. That's a quality late day breakout. All right, that's the same one Greg went over, but Greg, here's your bundle,
Right. So look,
3 of these.
you can buy individual courses. If you buy the bundle, you get all three. You get access 24/7 for life. So it's a lot of education. I forget how many hours it is, but it's a lot. And so when you don't have to consume it in a day, you can watch it, each of these, you could watch each of them over a weekend, one at a time. But to absorb it all in a weekend is overwhelming. So you just go back and watch it again and again and again, sections of it. You watch it a little bit each day and reinforce it, and then go and look at the charts, come to the coaching sessions, watch the coaching sessions over again, repetition over and over and over again. And the money management is truly, truly, truly the key. If you do not have this course, please, it is the most important course. Everybody's interested in the gaps and the swing trading and the candlesticks. And by the way, at the checkout, if so interested, you could add my newest candlestick course that goes deep into intraday trading and additional swing trading and multiple time frames and a lot of stuff. You could add that at a 50% discount at the checkout, but go and check it out. You can see, you get these layouts, which I'm going to show you, the coaching. You get this top-down course as part of the package there. So yeah, check it out. If you have questions, email us. Email me on these. If you got questions on options, definitely email Dan.
Greg, when you switch to real charts, why don't we start off with this healing that's on our watch list, and it's a breakout from a bottoming pattern, which we didn't spend a lot of time on today, but another breakout.
Sure. Okay. This is one of my layouts. I've got quite a number of them. Most of them have scans. This one here has scans, different scans within the watch list. And so you can click on this and it loads the stocks that are in that particular ETF. And you can find out which ones have bullish wide range bars and so on and so forth. But what was the symbol, Dan, that you wanted to?
I typed it, Healy, H-E-L-E.
Same thing, wash, repeat.
It's a
So
bottoming
daily
pattern.
chart. What's that?
Yeah, I'm just saying it's a bottoming pattern instead of uptrends or sideways trends.
It's transitioning, but look, your job is to take the broad picture, the broad concepts. Right. So you saw the beginning slide, relative strength and weakness, candlesticks, support, resistance, da, 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 da. And what we explained here, trend, and what you see here, right? What you see here is a loose pattern, and it breaks down and it comes all the way back again. And now it tightens up. This is why Dan wants to look at this. And it dipped down yesterday and it came right back again, and it's got room to go up. So would we eliminate it because it's transitioning? No, but it's not as high odds as the examples that we looked at that were already in existing uptrends and downtrends. But this is certainly one that has room to go higher. The markets were so inclined after this 2 o'clock, 2:15, 3 o'clock. I think this is something that continues to go up. And so, 65-minute time frames, you can apply the same thing there. But a lot of times where we're looking for setups where maybe the market environment is such that they're more difficult to find exactly what we covered today, we'll find them on 65-minute charts. And so those are our go-tos when the dailies aren't set up, so ideally. And you can see here the weekly is bottoming out also. All right, what other one, Dan?
Well, does anybody else have a breakout you want us to look at? I have a lot of bottoming pattern breakouts. Let's see. I mean, circle is, oh, here, L. Look at, no, L's a buy setup. Never mind.
Yeah. So
Bumble, here, Charter
it
went.
hasn't tightened up enough on the 65-minute. So let me go back up a second.
Charter was a bottoming.
This gets into multiple time frames, which we cover in the course, but this is down a lot, which means it's in a downtrend on an hourly time frame, but it's basing out. So you apply the same thing. This is a narrow body. So you're a day trader, you go to a 65-minute, you see it's beginning to tighten up. You can forget the moving averages. It's just that's what was on the daily chart. Don't need them on a 65-minute chart. And you just see this went down, it went up, starts going sideways, it tightens up. And from there, and this is what I cover in that other add-on course, which this was not there, a good example, but I would show you how to combine the 65-minute with the 5-minute time frame.
Well, Greg Rost is a true breakout if you want to discuss the quality of it.
Yeah, it's good. Look, so this didn't tighten up as much as I would like it to. I mean, what we looked at, because it's kind of whipped up and down, as you can see here, but it's breaking out. So what would I do with this? You buy it, share size it with a stop below here, and you do half position with that large stop. And maybe it forms a 1, 2, 3, and it begins to tighten up and continues to go higher. So the next thing you would look for is there resistance? And I think it's new all-time highs. That's new all-time highs on the weekly time frame. So it's a little extended from the 20, but it did go sideways for 2 weeks. So it is okay. So you just take the position, a little bit smaller share size. And if the market loves what Powell's going to say, this thing is probably on its way to 200. And if it doesn't like what he's going to say, it's going to come down, and hit the stop. So the share sizing allows you to sleep at night. And that's really the gist of it, is that can you accept losing whatever amount it is? And so we know that's always a possibility. Trail mode on ALT. So this is kind of a sloppy kind of a advance, but it's got room to go up. So you're trail stopping. Maybe you got in down here. This is where it tightened up, what we've been covering. Pulled back kind of hard. Looks like it can continue. It's a biotech, so maybe continues going higher. WAY, not cratered. Health information, but that looks got room to continue to go down. If you're into that, Dan man, 1287, hold on to that tiger. BHP. And I'm going to have to wrap it after this, folks, because I have to jump into that other room.
Sure.
Which, we do need to go. I mean, we covered a tremendous amount of stuff. If you want to learn more, join me there in a few minutes. I can't grab the frickin' thing now. Too many things in my way. Oh, yeah, here. I'm going to be speaking here in 5 or 10 minutes. Join me over there. If you enjoyed the presentation, give us a thumbs up, hit the heart thing. Thumbs up on social media. If you have questions, email us, Greg and Dan at Master Trader. We'll be back next week, and we'll talk then. Bye-bye.